Hi guys, is Devang Mehra a bull or a bear? That's the question I'm here to answer today. So I'll give you the context about this story. Why am I coming on YouTube today? First of all, I'm extremely sorry I've been out of action for a couple of days on Telegram. This is because I've been handling my own personal positions, doing some allocation changes in my portfolio. That takes a lot of time. So, been very dormant from the Telegram front and in the Discord front. But is Devang Mehra bull or a bear? Let's talk about that. So today morning, I posted a video on my personal Instagram, and I gave an idea to accumulate 15,000 puts of May expiry, and everyone started messaging me after that. And the messages were like, is the markets going to crash? Is the should I sell off and liquidate my portfolio? I got numerous messages, so I thought, why not come and just explain what I'm trying to tell you. Before I talk about all of this, make sure you like this video, subscribe if you're new, and if you're part of the family, hashtag TF family in the comments. That would mean a lot to me. So let's come to the pressing issue, the pressing matter. I'm going to give you some psychological tips to start with first, because this is something which people don't understand. So when I enter a weekly position, so if I say, guys, buy 14,500 call option weekly expiry, that means I am expecting a movement to happen in the next couple of hours. So I'll make money in the next couple of hours. When I tell you to buy a monthly expiry, first of all, I never tell anyone to buy. I always trade on my own. I'm very liberal enough or a transparent person that I tell people what I am doing. So please, if you're coming to calls or copy trade at TFA, that is not what we are here for. There are many other people who give calls. So we are here to just show you how we think, and just to guide you with how markets could move in the coming days. So please, whatever we say about the markets, and even this video is for education purposes, always consult your advisors and please do not copy trade. Always use your minds, because everyone has one. Now, coming to the issue, if I say I'm buying 15,000 monthly puts, does that mean I'm going to make money tomorrow? Does that mean I'm going to make money in the next week? No. That is something we have to psychologically understand. Does that mean, let me know in the comments what you think. If I'm buying 15,000 expiry put option, right now we're at 14,600. For May expiry, if I'm buying that, does that mean I am going to become bearish for the next 2 months every single day? No. I hope you're understanding that. So when I am buying a 15,000 put option, it basically means I think that the markets are not looking very good on the upside. And on every, so I said this, that on every 200 point rally on Nifty, I'm going to buy one more lot. So for people who are new to the markets, who have a limited capital, this does not bode well with you. Why? Because a 15,000 put option, a May expiry, costs about 42,000 or 40,000 right now. So if your capital is 50,000, you can't do it, because we never allocate the entire amount to a particular trade. Number one. Number two, when I take a 15,000 put option for May expiry, I'm also doing intraday on my own, on my stock. So if I see a bullish momentum in a stock, I'm going to trade that stock, make money on the intraday basis, which will mean that if, let's say, I buy ICICI Bank, it goes up, I'm obviously going to have a loss on my month end expiry puts, but eventually I'm going to make intraday gains. And eventually when markets do fall, which I think they will, I will recover all that losses that have happened. So coming to the issue, please have these points in mind and think logically, right? So what's really happening in the economy? Let's talk about that. Today, I was surprised to see that no one talked about inflation. I follow a lot of people, I read a lot, and no one has talked about inflation. Today, the WPI inflation has come to around 7.5%, and that is well above our 2 to 6% range set by the RBI. That's a matter of concern. That is a matter of concern. So if the inflation stays high like this, money supply has been good, which means that the RBI is going to have to start to increase the rates coming in the policy. That will be required, which has not been seen in the last 4-5 meetings. That is one issue. What has been, let's talk about what are the positives. Let's talk about what are the negatives. What's happening right now is there is a good fight between bulls and bears, buyers and sellers. We see a aggressive buying happening one day, and then the next day we see aggressive selling. So first of all, if you're a BTST player, you can't make money because you never know what's happening. You never know what's happening. Secondly, it's a very good fight that has been happening for the last couple of sessions now. It's been happening since this 14,880 level has been touched. For me, this zone is a decisive zone. If the markets want to go up, they need to break this zone. As long as this zone is not broken, so we have got a very good range bound markets between 14,250 levels, 300 levels, and 14,900 levels. It's a good 600-point range that's been formed. As long as we are in this range, you're going to expect some good consolidation, good volatile movements that we've been seeing in the last couple of days. What happened today in Nifty? Nifty, if I show you the intraday chart on Nifty, Nifty first plunged, if I show you today morning from 540 all the way to 350, 200 points, then again went up 200 points. So be prepared for this volatility. Why? It's a good fight we are seeing in buyers and sellers. What is driving this fight? That's the question that we need to answer. So right now what's happening is, I always say track the global markets. I always say that. And right now there's a tug of war happening between India and global markets. Last couple of sessions, IMF and World Bank, they increased growth forecasts on all the countries, a lot of countries. And India also was increased as expected. But you know what was the reason given for India increase? I'm not going to quote the entire statement, but the major reason was that US economy has revived, has recovered. It's the best recovery we've seen in 50 years. And because of this huge recovery that we're seeing after the pandemic in America, this is going to trickle down to India. However, we are seeing pandemic issues, lockdown issues, as well as the rate cycle issues that are happening, which could also lead to, so because of which we cannot really give a big forecast for India and the emerging markets. Because America wants to increase rates, and this is not going to bode well with the Indian markets, who does not have space. India does not have space. Very simple going forward with that. So because of the global markets, the developed economies, and their benefits trickling down to India, that's the primary reason why are we being upgraded by the World Bank and the IMF. At the same time, just last week, Chris Woods reduced his overweight targets on India. Goldman Sachs as well as Moody's reduced their global the overweight targets on India. Why? Lockdown. So right now, we're having a very good fight between global markets and Indian markets. I am always a believer when I say this, that India always will follow American markets. Why? America is the king of the world. Let me put it that way. No offense to anyone. But, if America is going up, we cannot stay down for long. But what's been happening now in the last couple of weeks is that America has been going up really well. Even today, which I'll talk about in a bit. However, India in the last 2 months has been consolidating. The question is, what's happening? In America, just today, we had the jobless claims when they came out, they were at 576,000. Which means that only 5.7 lakh people filed for unemployment benefits, which means that it's the lowest figure ever since the pandemic has hit America. So, which showing that America is rebounding, but that is not the case with India or these emerging markets. That's why we are witnessing pressure here. America also has also posted the earnings have started. The big banks like JP Morgan, Chase, and Bank of America, they've started posting earnings, and they've been very, very good. If you read the reports, they've been very, very good. However, Indian earnings, when they've started, they are not as per expectations. They are good, no doubt, but not what we were expecting. That's the reason why Infosys has seen wild profit booking, TCS saw wild profit booking, and so on. So there is a gap coming in. If I ask you what's the positive news, so should I trade on news? I'll come to that. Have some patience. Now coming to what is positive about India. So American markets are doing well. The retail sales data came out extraordinarily well. So that's the entire reason why we have seen today America S&P open gap up. It's again at lifetime highs. Dow Jones gap up. It's again at lifetime highs. NASDAQ gap up. It's again at lifetime highs. That's the entire reason. So they have been quite comfortable. Right now we have pulled, it's like a slingshot. We have pulled India and the strings of India. And because of these local issues, we are at the bottom. Once these local issues are resolved, please quote me later. Once these local issues are resolved, and when we leave this weight, Indian markets are going to go further up towards the lifetime highs again. But those issues right now are there. And I think they are going to be here for some time. What I mean by that is, yes, we will be coming towards the all-time highs in the coming sessions. Goldman Sachs already has a target of 16,500 on Nifty by December end, and I'm intact with that. I think we will be coming to all-time highs. I am a bull in the long run, but currently we are seeing some whip flashes happening in India. We are seeing some good aggressive buying and selling happening. Why? Because people are buying on positive global cues and people are selling because of negative local cues. What are the local cues that are bothering me? First of all, the only good thing that has happened this month in Indian markets is the GST data. Yes, the GST data that came out was a record high data on the 1st of April. I think after that, there has been no good news. Auto sales data were fine, but auto sector has not been doing anything right now. The only thing which has happened good was the GST collections. After that, IIP data was poor. We had the industrial production data was poor. We had inflations which were too high, which were not expected, and the earnings have not been good. And at the same time, 2 lakh cases in India reported yesterday. 2 lakh 3 was the number reported yesterday. Basically, our cases in India have doubled in the last 10 days. It was 1 lakh earlier, now it's 2 lakh. That's the issue that's at stake. And this is after countries issuing curfew, the cities doing curfew that is still not able to contain. Maharashtra has already done a Janta curfew, but that's not able to sustain these cases. So the matter at stake is, are these cases going to come down? Because if these cases start to come down, if we start to see an improvement, yes, our markets are going to come up. And you should be a bull in the long run. But if these cases are here to stay, and if you see a consistent rise in these cases going forward, this is going to have pressure on the government because they will have to impose stricter measures. You know what happened right now is, I think before the Maharashtra CM statement, you know why SGX Nifty shot up? Number one, the words were sugar coated. I'll be very honest. I have no offense to anyone, and I do not support any politics, and so no affiliation with anyone. But he said that there's Janta curfew, and just before that, the finance minister said that we are not going to impose any nationwide lockdown of the sort that we had previously. And I think it will not happen right now. But if the cases are not controlled, things will be getting bad, because that would be the only thing to break the chain. As simple as that. So going back to the technicals, what's really happening? 14,880. This is one level that we need to be concerned about. Right now, we got a big gap down. And as long as we are holding this gap down, you cannot witness any aggressive buying, even on the intraday basis. What I mean by that is, even if you go up, you could again fall down. Why? Because it's a good gap. And when the gap is filled, markets could then start their correction again. So what I am trying to say is, as long as we are maintaining this range, you need to be careful at what you're doing. As simple as that. If you're an intraday player, fine, the price action principles, follow those. Just to clarify what I've told you earlier on Instagram, etc., on Telegram, I said I've bought 15,000 May end puts. Why I've bought May end puts is because I do not know for sure if the markets are going to fall, and if they do fall, when are they going to fall? Which means that I am going to do my intraday trading, could be on the positive side, could be on the negative side, but I will continue intraday buying or selling. So please understand, if you have a capital of 1 lakh and you put everything in this trade, it's not going to work out that way. You'll obviously lose money. Also, please understand, when you do options, you have to average trades out. If I put a particular sum in the trade right now and Nifty shot up 100 points, people started telling me that you must be in a big loss. I'm in a loss and I'm happy to accept it. But the trade is not over yet. I might have to book a loss when, if markets go up 14,880, I will book a loss. I will accept defeat and become an aggressive buyer. But as long as that is not happening, it's a consolidation and you need to accept it. You need to accept it. I hope these points are clear. So there is a tug of war that is happening, and the tug of war is going to be there. We need some kind of understanding where the markets need to go. We need some understanding on the COVID situation. I hope it gets better. Yes, making money in the market is another story, but I hope it gets better, because that's for the betterment of the economy, for the betterment of the country. So this is what I had to say about the markets. And let me just quickly give you an intraday view as well. Since we're here, let me give you an intraday view as well. I'll open the 15-minute chart on Nifty. No doubt it's been a very good, very great closing on the Nifty charts. This was because of Reliance and HDFC Bank. Last night on Telegram, I told you very clearly, crude oil is looking very strong. So because of crude oil looking very strong, Reliance oil and gas has gone up, has blasted today. At the same time today, we saw short covering happening on HDFC Bank. Why? Results are coming on Saturday. All because of that. We saw huge momentum coming in the last couple of minutes of the trade. This was because mainly of Reliance and HDFC Bank. Now, what is my plan? My plan is very simple. As I said earlier, there is a gap that is coming across the screen. Let this gap be filled and let us decide then what to do. Even in the next week, there is a holiday. So as long as these holidays are there, you can't be a great trader because there is a lot of pause that is happening in every trade. So for example, the other day markets plunged, they went up, again they plunged. Why? Because too many holidays are coming. So we don't know what to do. Just to put it in very simple terms, last night on Tuesday, we had a very good double bottom breakout and people wanted to be buyers today. Yes, the buying happened, but it happened on SGX Nifty. If you see the SGX Nifty chart, the buying happened. It gave you 14,800, which is nothing but the filling of the gap on the Nifty charts. So in a way, SGX Nifty has already filled this gap. So is SGX Nifty going down or is it going to break the 880 level? We don't know. And to see that, we have to see the date of the next couple of days. We have to see that. So my view is, as long as this month is a very fabricated, very small month in the sense that too many holidays are there. So you need to have small position sizing. Even this weekend, Friday, please do not hold aggressive positions because HDFC Bank is going to post results on Saturday. And that is really going to spoil your momentum if you are not on the right side. Keeping that in mind, what can we expect tomorrow? Tomorrow is Friday. Friday is known for Black Fridays or bloodbaths. Always remember, on Friday have hedged positions because some kind of trend always emerges on Friday, and a lot of time it gives you a bloodbath for some reason or the other. But I will be very careful tomorrow. If something of that sort happens, I'll tell you. If you are going long in the markets, and I think there's a good trend line also coming on the charts. If I show you the trend line, a good trend line is coming. I would suggest you, as long as this trend line is maintained, you should be comfortable in the long side. Be a buyer on dip, of that sort. And on the long side, your target should be around 14,800. This should be the maximum target that we need to go for. At that point of time, you need to become very, very careful. So I'm going to be very careful. So on the upside, I'm not going to be an aggressive buyer. However, if this trend line breaks, you can see an aggressive selling. I also want to put that disclaimer out there. Please understand, on the upside, I have no problem. If a particular stock like HDFC Bank or any other stock gives me a movement upside, I will buy that stock. And I'll tell you what I buy tomorrow or day after, etc. But on the upside, I'll be very scared. I'll be taking a short position, a small position, and I'll be booking profits faster because I'm expecting a volatile session happening on the top. Why? Because we're coming close to that 880 mark. However, if this trend line breaks, I want to be cautious, and you can see aggressive selling happening in the market. On the Bank Nifty front, Bank Nifty is a similar scenario. What I mean by that is, also in Bank Nifty, you can see a trend line is being happening. This is a trend line that's happening. It's supporting this very similar scenario in Bank Nifty. This gap is going to be filled at 32,500. This is the area. So on the longs, you need to have your profit booking. You need to book some profits at 32,500. This is one area where you need to become careful. Why? Because we will see on Monday, is this level going to break, and are we going towards 33K, or are we taking resistance here and then we are falling down? So on the upside, I have a good 300 point available on the top, but I will be more interested if something like this happens. The markets are respecting the trend line and the trend line breaks. This could come somewhere at this 32,000 level. So I would put it very simple terms. As long as 32,000 is maintained on Bank Nifty, you could be a buyer on dip. However, if 32,000 breaks on Bank Nifty, you can start to see an aggressive fall also in the market. So just keep that point in mind when you're trading. So I just wanted to put this small video out there to tell you what am I. So I am not a bull, not a bear. I will take every day as it is. I will take every day. I will grasp every day as and when it comes, because right now it's a very aggressive market that we're witnessing. So overall, what I can suggest to you is, I see some kind of weakness coming in because of lockdown. As soon as the lockdown issue is removed, you will see markets coming back to the highs. So because of this issue, because of this weakness I'm seeing in the markets, I've taken a far in the money short on the market. However, I will continue my intraday long or shorts depending upon price action. So I just wanted to put this disclaimer out, and I hope you like this video. Let me know in the comments what you feel. Thank you so much.